Hello, everybody. This is Alan Ellman, the blue collar investor, with another sample trade video with a trade that's been taken from one of my option portfolios that I'm sharing with you in the BCI community. Now, these trades should be considered for educational purposes. They're not specific trade recommendations, but yes, these are actual trades that I executed from one of my several option portfolios. In today's video, we're going to be taking a look at DigitalOcean Holdings, which is listed on the New York Stock Exchange under the ticker symbol DOCN. Now, the trade was initiated on 2/10/25 with a contract expiration of 2/21/25. So it's going to be a 12-day trade when taken through expiration. Now, we're titling this a traditional 2-week cash secured put trade taken from our premium stock report. So this was one of the stocks on a recent stock report that we provide to our premium members. In addition to the stock report, we also have a weekly ETF report, exchange traded fund. We have a monthly blue chip or Dow 30 report and a quarterly high dividend yield report. This is from our weekly stock report. Now, all of the information that you're going to see on the top bullet points was information taken directly from the report. So at the time that I initiated this trade, DOCN was trading at 45.85. Where did it come from? It came from the BCI database of securities that we have identified over the last 18 years as potential option selling candidates. So that was the resource that we used, and then it went ahead and passed all of our rigorous screens, fundamental, technical, and common sense. Now, the stock had been on our watch list for 2 weeks. Okay, so again, it has to pass a very rigorous screening process, and it did so this week and the last week. Now, the stock digital does not give a dividend, therefore, there's no ex-dividend date. And it did have a robust implied volatility of 43.6%. So having a very robust implied volatility means that the option returns are going to also be fairly robust. The risk to the downside, a little bit greater than stocks that have a modest or low implied volatility. Now, DigitalOcean Holdings is located in the software industry segment, which at the time was ranked A or in the top 20%. The next earnings release was 2/25, which was outside of the expiration date because we always avoid earnings reports. The expiration date, this particular contract was 2/21, so we didn't have to worry about that 2/25 earnings release. Now, the on-balance volume was bullish, which means more cash was coming in on up days than on down days, and again, that's a very bullish signal. And the mean analyst rating, the average of all the analysts, was 2.12, which is excellent on a 1 to 5, with 1 being the best and 5 being the worst. So the MAR rating was also a bullish signal. Now, weekly options are not available for DigitalOcean Holdings, but we're going to do this 12-day, 2-week trade expiring on 2/21/25. So here we go. The option chain on Monday, 2/10, showed that the 42.50 out of the money put, remember, digital was trading at 45.85, with a 2/21 expiration, had a bid price of 45 cents. That's what we generated when we traded this option. Now, I always, when I make these videos, I use 100 shares, but for full disclosure, normally I'm selling between 3 and 8 contracts on each position. All right, but the percentiles will be the same. So looking now at our trade management calculator, which is a must for everybody trading covered calls or cash secured puts, we enter the information into the blue cells on the spreadsheet. Now I piggyback the blue cell entries with the initial calculations, which are normally left to right, but I piggybacked it so you could see it easily in one screenshot. So again, the entry price was 45.85. Remember, we're not buying the shares, but that was the current price when I created this trade. The 42.50 out of the money put strike generated 45 cents. Now, once we make those entries, the spreadsheet will then automatically calculate the following. First of all, circled in red here, it tells us that if taken through expiration, it's a 12-day trade. Taking a look at the break-even price point, 42.05. Keeping in mind that digital was trading at 45.85 when the trade was first executed. Now, the brown cells are really the meat and potatoes of the spreadsheet. It tells us that the time value initial profit was 1.07%, and based on a 12-day trade, that annualizes out to a very nice 32.55%. Now, if digital drops from 45.85 below the 42.50 strike, and we take no action to buy back that option, in other words, assuming no exit strategy execution, we then purchase digital at the break-even price point of 42.05, which represents an 8.29% discount from the price of digital, 45.85, when that trade was first entered on February 10th. So at the time that I'm creating this video, which is 11 a.m. on 2/13, okay, so this is Thursday. I entered the trade on Monday. Digital had actually dropped $1.11 per share to 44.74. So where are we at the moment of this video? Well, we are $2.24 above the 42.50 strike price. So we're pretty safe right now from being subject to exercise. We're also $2.69 above the break-even price point. So what does this show us? Well, it shows us that one of the reasons that we should beat the market on a consistent basis when we sell covered calls or cash secured puts is that we are lowering our cost basis, period. That, I mean, you don't have to be a rocket scientist to understand the advantage, one of the advantages of selling options in a low-risk conservative manner. So even though digital Ocean Holdings has dropped by $1.11 per share between Monday and Thursday, we are still in a winning position, relatively comfortable winning position. Now, it's true that we have another 6.5 trading days until contract expiration. So the final outcome of this trade is yet to be determined. But as of right now, Thursday at 11 a.m., things are looking good with this cash secured put trade. Folks, that ends this video, a sample trade with Digital Ocean Holdings listed on the New York Stock Exchange, DOCN. Folks, I hope you enjoyed this video. More importantly, I hope you benefit from it. As always, this is Alan Ellman, the Blue Collar Investor. Take care, everybody.